Idea Cellular Vodafone India's merger has been announced. Now this combined entity will be the biggest telecom operator in India.
Do you want to?
हम मानते हैं कि कुछ नया सीख के हम दुनिया में अपनी जगह बना सकते हैं। इंग्लिश बोलना सीखो वी ऐप पर। फूलो फलो स्पीड से बढ़ो।
The stress on the telecom sector and especially for Vodafone Idea, the worsening financial position of the telecom company has led to Kumar Mangalam Birla, the chairman and the promoter of Vodafone, to write to the government saying that he is willing to give up his stake in an effort to save the company from what he has termed as an irretrievable collapse.
The number you dialed is not in service.
Important updates coming in on Vodafone Idea from sources where the impasse on Vodafone Idea seems to continue. Now remember, Vodafone Idea is sitting on a very large debt. It needs money.
आपके पास केवल एक ही बची हुई लाइफलाइन है, ask the expert.
Vodafone chief Nick Reed will step down at the back end of this year after a massive underperformance in the company's share price.
The Vodafone Idea is caught between the devil and the deep sea, to put it very mildly.
Unlike my colleague Kalyan Parbat, the telecom cat of ET, I would go a step further to say Vodafone Idea is caught between the three S's: spectrum dues, shareholder apathy, and Sarkari apprehensions. But believe me, between September of 2021 and January of last year, there were indeed some positive buzz around the same company.
If I give my memory a quick jog, I think the last piece of good news about Vodafone was when the package happened in September 2021. And then subsequently, there was more heartening news when they bought nearly 19,000 crores worth of 5G spectrum in the auction in August, right? So, that took a lot of people by surprise, because about 19,000 crores for a company which is, with a negative net worth was quite a pleasant surprise. So that was heartening news. So, there was a feeling that they are serious. The promoters want the company to survive. But then, things haven't been going too well, and they've been losing customers continuously. In the last 2 quarters alone, they've lost 9.3 million customers, which is downright scary. And they've been losing out on revenue share as well. They haven't got the fundraise, as in the external fundraise. So those are huge concerns.
So how many still are the loyal Vodafone Idea subscribers left?
Officially 234 million as of Q2.
That means it's almost 50% down from the peak of 400 million plus subscribers when Vodafone of UK and Kumar Mangalam Birla's Idea Cellular decided to join forces in August of 2018 to create a merged powerhouse, the largest telecoms operator in India. Since then, it's only been a series of missteps, mismanagement, and muddle. Call it a case study on how to kick the can down the road, hoping its bag full of woes will somehow disappear, or worse still, get diverted onto someone else, in this case, the government of India. Hardly surprising then that the recurring problems have once again come down crashing.
The loans that they want to raise is 7,000 crores, and they have dialed in a clutch of banks, which includes State Bank of India, HDFC Bank, Punjab National Bank, and IDFC First Bank. What their argument is that since the government returned the bank guarantees totaling about 15,000 crores last year, these banks can afford to take further exposure to the troubled telecom operator.
It's Thursday, 12th of January. You're listening to Vodafone Idea, Any Idea Sirji on the Morning Brief. From the Economic Times, I'm your host, Arijit Burman.
The Vodafone number you have dialed is presently busy. Please stay on the line or call again later.
In this episode, we go through the latest set of issues plaguing the telco with Kalyan. But guess what? It's not just in India, but Vodafone Group a sprawling British telecommunications giant present across Asia, Africa, and Europe, is facing severe headwinds at its headquarters, with its investors angling for an overhaul of its complex business model, bureaucracy, and dwindling profitability. In fact, its CFO turned CEO of 8 years, Nick Reed himself, is being shown the door after presiding over a drop of £33 billion in market value. That's more than half the starting total. So we have a very, very special guest who will join us from London, who has been tracking the company for decades to give us that global perspective.
Jacob Bluestone. I cover European telecoms at Credit Suisse. I run the equity research telco team here. I've been a telecoms sell-side equity analyst for 21 years now.
But first, let's delve deeper into the issues at hand closer home and start with a quick recap. Vodafone Idea's merger created a Godzilla with 408 million active subscribers and a revenue market share of 32.2%. A footprint of 15,000 branded stores and 1.7 million retail touchpoints across the country. But day one, it inherited a bloated balance sheet, debt of over 1 lakh crore rupees as against a cash balance of around 19,000 crore rupees. Today, that debt number has ballooned to almost a double at 2.2 lakh crore rupees. Mind you, around 9,600 crore rupees of upcoming debt needs to be repaid by September 23, and the gross cash balance has plummeted to just 190 crore. I repeat, 190 crore. And that's where the problem starts. Competition has ensured tariffs stay abysmally low, plus the two companies took inordinately long to actually combine in spirit and culture, and then the Supreme Court bowled a beamer called AGR dues.
Well, the big story that we're tracking here on CNBC TV 18, it is a massive setback for telecom companies. The Supreme Court today has rejected the definition of adjusted gross revenue, which is the basis on which the telecom department calculates spectrum charges and license fee. The Apex Court held that all revenues, barring termination fee and roaming charges, should be a part of telecom companies' adjusted gross revenue computation. Now, today's order has effectively exposed the sector to a potential demand of up to 1.33 lakh crore rupees.
Telecom saga that's been taking place just 2 days after the Supreme Court came down heavily on the government and the telecom companies. There is simply no room for relief. The government could initiate action against the telecom companies for non-compliance of the Supreme Court order.
So the company is scrambling to stay afloat. Finance Ministry will wait to hear from the Telecom Ministry before finalizing its future course of action.
To be fair, the government did step in and announced a package that, though was meant for the entire industry, including Bharti Airtel, was actually tailored to keep the lights on in Vodafone Idea. A key component of that was the clause that the government would convert the accrued interest on deferred AGR-related dues into equity. But let's bring Kalyan back to understand why, even after a year, the stalemate continues.
Last year, last January, that is when the government gave some sort of a commitment to, as a BOT. It hasn't really happened for a variety of reasons, I guess. Now, the main reason which the government is saying is that they would want the promoters of Vodafone Idea to put in adequate amounts of, capital to demonstrate their seriousness about the company's survival and growth. So without that happening, the government feels whatever Vodafone Idea promoters have been talking about, we hear talk about 2,000-3,000 crores. That is, pocket change. That is not going to, move the needle one bit. Vodafone would require at least 40,000 crores of capital. Out of that, ideally, the banks can take care of half of that. 50% of that, which is about 20,000 crores, that needs to come from Vodafone Idea's promoters, as in the Aditya Birla Group in UK, Vodafone UK. So unless Vodafone puts in serious equity, the government feels it's unviable for them to get into, this company as the biggest shareholder.
And why is this conversion important?
We've been hearing about all this talk, aggressive talk about the government wanting Vodafone's promoters to put in sizable amount of equity after this, things got deadlocked around this conversion issue.
Correct. Because common sense would say if you convert, it's a straightaway 16,000 odd crore oxygen for a company that is gasping for breath.
Correct. But vibes that keep getting from DOT or from the ministry and even from, senior bureaucrats in the other ministries is that, government is very keen to support Vodafone Idea. And they would want the sector to have three healthy players, in the interest of the Indian consumer. But, Vodafone Idea needs to, as in the owners of Vodafone Idea, they need to have more skin in the game. Entirely banking on investors, lenders, and the government to bail them out is just not acceptable anymore. That's it. Money hasn't come into the company per se. That is what the government is saying. That guys, you guys need to put equity in, to grow the company.
Let's bring in an important story now. Sources are telling us that Kumar Mangalam Birla has met with the Telecom Minister Ashwini Vaishnav to urge the government to convert Vodafone Idea's license fee as well as spectrum dues into government equity.
Isn't it bizarre? This is a telecom joint venture involving two of the biggest names money could buy. A storied Indian family business group called Aditya Birla and Vodafone, among the marqueest names in the world. Yet, the government is apprehensive about their interest levels of the two sponsors and thus the very longevity of their venture.
Exactly. I mean, ever since the merger has happened, it's just been going downhill in terms of they've been losing revenue share, subscriber market share, customers. So the government is clearly not they're not at all convinced about Vodafone's survival chances without an adequate capital infusion by the promoters, which they feel will lead to the banks stepping in and also the external investors coming in. Now, that's the whole point. So the government is not, for some reason, and particularly the DOT, they are the guys who are not confident in stepping in right away unless, like I said, the promoters demonstrate their seriousness to invest serious money, not pocket change, serious money into the company.
Serious money in this case is a multi-billion-dollar check to be spent for 5G rollout, completion of 4G network, and operations and maintenance of legacy infrastructure.
The government for now is not even looking at things like 5G. Government just wants the company to bring in, and they haven't spelled out the amount, an adequate chunk of fresh capital into the company. Like I said, they believe, the government side believes that Vodafone needs about 40 to 45,000 crores of capital, out of which they believe the promoters ought to handle 50% of that, which would be about 20 to 22,000 crores, right? Upwards of $5 billion. So that is the immediate requirement that the government is hinting at. $5 billion plus, so about 20,000 crores. Okay, minimum.
Right.
Now, so that is where so the disconnect is Vodafone Idea's promoters. I mean, there's been nothing official, but we hear feelers that they had given some sort of indication that they could put in about 2,000 to 3,000 crores, which the government said is way
just not
inadequate.
The subtext is simple. What if post-conversion of these dues, the government emerges as the single largest shareholder in a private company? But then, if the company goes under, the government not only takes a bath financially, but the opposition will tear it apart for bailing out a private company by taking equity exposure in a dwindling setup, by in fact nationalizing the network and then losing all of taxpayers' money. Remember the Rahul Gandhi jibe, Soot Boot Ki Sarkar?
More importantly, not just that, Rujit, I mean, in the sense, what if that Vodafone does not have enough capital and it is unable to compete with Reliance, Jio and Airtel on the 5G front, loses more market share and bites the dust or goes to NCLT? What happens in that case? The government, as a shareholder, will, as an equity shareholder, would face huge challenges in recovering its money, and it could face very uncomfortable questions in Parliament.
This is a distinct possibility as rivals Reliance Jio and Airtel are spending buckets of money to up their game and invest on the latest 5G technologies.
Reliance Jio is expected to invest over $9 billion in 5G capex. Now, that is excluding spectrum. Airtel is expected to invest over $7 billion. That is excluding spectrum costs. So a countrywide, full-fledged 5G rollout, Vodafone would minimum, or even at a base level, would require to invest at least $5 billion on the 5G network, right? So,
correct.
Yeah, and 5G involves a lot of retooling of existing infrastructure.
So, it is boiling down to who blinks first, the promoters of Vodafone Idea or the Telecom Ministry. If one looks back, Mr. Birla had been playing on the front foot since 2019 with lots of empty threats and rhetoric. First, he warned the government that his company might shut shop if the Sarkar did not intervene to upturn the $4 billion retrospective levies and taxes imposed by the Supreme Court on the telco for pending AGR dues. His counterpart, Nick Reed, also warned the venture was staring at liquidation. Then again in 2022, Mr. Birla pulled a rabbit out of his hat by writing to the government he was willing to sell his 27% to the government. It seemed then to be an aggressive move, but now his back is once again pushed to the wall.
That was around the time when all the discussion around the conversion was sort of peaking.
Right.
Now, but then subsequently, Vodafone Idea's promoters have put in 4,900 crores. So that sort of seems to suggest that there was some intent on the promoters' side to, do something to move the needle. But then again, it turned out that money was merely to pay off Indus. It was being used to pay off Indus and nothing really came into the company. So obviously there's a perception issue there that they need to ramp up their 4G operation at a pan-India level. More importantly, they need cash to, pay their vendors. There's about 12,000 crores plus of vendor dues that they need to clear. And then they haven't even announced their 5G plans. So these three building blocks need to be addressed, for which they need money. They need their own capital, they need promoter equity, and they also need an external fund base.
Yeah, it's logjam and everyone's pushing the can down the road.
Exactly. Too much of fog on the windscreen, as they say.
If the company is facing so much stress, why is it not in the bankruptcy courts? No matter the ego bruise such an event will cause to the house of the Birlas. Never ever have any of their group companies shut down under Chapter 11.
I was just talking to a lawyer the other day. So he said the Vodafone is clearing its, dues to banks and financial institutions quite meticulously. In fact, their dues to banks and financial institutions have reduced by over 8,000 crores. It was, I think, 23,000 plus. It's down to 15 odd thousand. So obviously the catch this lawyer told me is that, see, if they default on a bank loan, it's very easy for a bank as a financial creditor to move the bankruptcy court. Not so easy for an operational creditor like an Indus or an ATC. Because if Vodafone Idea were to say that, boss, this due is kind of disputed, and if they can establish it, then, that demand won't stand in the NCLT. So which is why Vodafone Idea is obviously aware of that. So which is why they're attaching greater priority to clearing lender dues as opposed to vendor dues.
But if the company is losing revenue market share, losses are mounting, then how is it paying its lenders on time?
Since their revenues have been, growing marginally, their ARPUs have also been growing marginally. Okay, they haven't been losing ARPUs. So to be, fair, their ARPUs have been climbing. They generated an ARPU of 131, which was definitely in Q2. There's been a bunch of tariff hikes that happened last year. If you remember,
Right.
in 2021, Vodafone and Airtel and Jio, they raised tariffs in, I recall, in November 2021. And prior to that, Vodafone and Airtel had raised rates in July, August. So the cost of mobile services has actually increased. There were two successive jumps. So that has obviously helped in beefing up their revenues. That is, and so obviously, but that impact is sort of now petering out, and now they'll need to. There's already talk about another round of headline tariff hikes because telcos would need to recover the huge amounts of investments, cap expense that are happening in 5G. Fine, Vodafone hasn't even started out on 5G, but they need cash for a host of reasons, as we just discussed.
For the last several years, Vodafone Idea have tried to raise equity by selling stakes in the company or around their infrastructure assets. But nobody, I repeat, nobody wants to bell the cat. Everyone's uncertain about what lies ahead.
It's a funny situation. The external investors, they want Vodafone Idea. They want Vodafone Idea to offer clarity on the government shareholding in the company. Now, that hasn't happened because the government wants Vodafone to, first demonstrate that their promoters are serious about, saving the company and growing it by putting in equity. So the Vodafone Idea is caught between the devil and the deep sea, to put it very mildly. And so that's where it's at, because they're blaming the government for delaying the conversion. The government, in turn, is shouting back that you guys haven't put in enough to give us the confidence to step in. The lenders are saying, boss, we will come in and give you fresh, we might consider, more loans for you guys, provided you can show us a cogent, a viable business scale-up plan.
So, all roads lead back to the State Bank of India. A 16,000 crore loan request has now become a 7,000 crore SOS to a clutch of private and public sector banks. But tell me, how does one bankroll a company with such negative net worth?
The banks were very uncomfortable about lending to a company which nearly 76,000 crores of negative net worth.
When I spoke to these banks, and they are saying that there are three important points to take into consideration. One is that the government is yet not giving any timeline on when it wants to convert its stake of about over 30% in the telco. The second is that the promoters are not infusing any stake. And the third is that they have themselves failed to bring in any strategic investor that they have been talking about for a long time. But still, VI has now approached banks, and they are saying that they need these dues immediately to pay off Indus Towers, who they owe about 7,500 crores, and they also have current dues of about 250 to 300 crores.
Mind you, if Vodafone does not roll out its 5G network on time, it may face penalty, or things may even get worse.
The minimum rollout conditions clearly stipulate that a telco which has acquired 5G spectrum needs to launch 5G services in the metros within a year of the spectrum allotment. And it needs to be present in one location in all 22 circles, as in it needs to launch 5G services in one location in all 22 circles of India. So Vodafone Idea hasn't even, announced launch plans. They haven't even finalized vendor contracts. So, whereas rivals such as Airtel and Jio are rapidly rolling out 5G every day, they're on the ball and they are looking to have pan-India coverage by December 2023. So Vodafone will really need to catch up. But coming back to your earlier question, you could be slapped with a financial penalty. Worse, if this delay exceeds 52 weeks, as in a year, you could lose your spectrum. The government can take away your spectrum. So 19,000 crores of spectrum could be at risk, if they don't meet the minimum rollout obligations on time.
And unless you pay vendors for network or tower companies where you are a tenant, they will simply stop entertaining your requests.
They have over 12,000 crores of dues that they need to pay the vendors. The biggest would be they owe the most to Indus Towers, but they owe 3,000 crores Indus Towers. But among the network vendors, they reckon to owe over 3,000 crores to Nokia, and maybe around 400 to 500 crores to Ericsson. And from what we hear is that vendors obviously are tightening the screws, telling them to come up with advance payments, telling them to clear past dues before they even talk shop on the 5G front.
But as I said, India is just part of the problem. Around the world, challenges are piling up. So what is the way out for the once vaunted blue-blooded British Telecoms group? I asked Jacob Bluestone what, according to him, were its three main woes. Is it the size and M&A has gone wrong? Is it the bureaucracy? Or is it simply financial indiscipline and margin contractions?
It's a good question. This is a business that doesn't cover its cost of capital and hasn't for years. But that's really just the sort of the maths behind why there's something that's not working from a financial point of view. I'd say the three main sort of headwinds that they face. Number one, given that the vast majority of the value, sort of 80%, sits in European telecoms, and European telecom, fortunately, is a very challenged industry. So part of the woes is just related to being in a very challenged part of the market globally and industry-wise. The European telecom sector hasn't covered its cost of capital in over a decade. The second point, I think the portfolio is probably overstretched in too many markets. And I think there is a long-running debate on what kind of scale matters. Is it local scale or is it cross-border? And then I think thirdly, there's a specific issue around Vodafone Germany. Vodafone Germany accounts for about 40% of free cash flow of the group. They should have been performing actually much better than what we've seen. So there's I'd say there's sort of a pyramid of issues. There's the broader, it's a tough industry. There's the issue that the portfolio setup probably isn't quite right. And then there is a specific issue around the performance of their German business in a market where ET is doing fine and other German telcos generally are doing pretty well as well.
Now, the CEO, or rather the CFO turned CEO, who's been around for 8 long years, is finally leaving. Markets seem to have cheered that. A search process is on. Do you think this should hasten the process of a reboot and a restructure?
I think, with the change in CEO, I think it is probably fair to expect some change in strategy coming. And I think with investors, there's clearly a big debate on what will that new strategy look like. The previous CEO did actually do a lot around particularly the portfolio reshaping. But I think it's clear that there will be more to come. I think a reasonable guess is that we might start to see perhaps more of a breakup of the group. So there've been press articles about potential sale of some of their major assets. You've had some activism as well. So, I think, yes, could we see a sort of perhaps a breakup in some shape taking place? I think that is definitely a possibility.
That brings me to my next question, because to give the man his due, under Reed, the company has paid significant, or let's say enough dividends. Yet the overwhelming narrative and the commentary has been the payouts did not generate shareholder value. Why is that?
I think there's two elements. I mean, one is the sort of simple share price answer that paying large dividends doesn't necessarily help the shares if the dividend is not seen as sustainable. I think the broader issue is really about allocation of capital. Do you give the money back to shareholders, or does it need to be reinvested into the business? Ideally, you'd like some combination of both in a telco. I think in Vodafone's case, given particularly the performance in Germany, I think there is a sort of question mark of whether they need to perhaps put a bit more investment into the business to, have a better operational performance. And then the question, well, how big should that be? So I think ultimately, yes, high dividends are attractive, but you do also need a business that performs well and can sustain dividend yield. And and sustain that dividend level, something that we haven't really had.
True. You talked about the key European markets, UK, Germany, Spain, and Italy. They are the Vodafone Group's biggest markets. All, incidentally, have suffered declining EBITDA profitability since Reed took over in 2018. Italy and Spain, in particular, have seen huge margin contractions. Why aren't they just monetizing? Are they no buyers, or Reed has always been a reluctant seller?
I think the issues in the different markets are different. And, so I think a sort of simple monetization is frankly a bit too blunt. What's the famous quote? All happy families are alike, but all unhappy families are unhappy in different ways. I think, the challenges in each market are different. Italy's a good business. Vodafone Italy is a good business, but it's a really, really tough market. You had a new entrant who came in, similar to kind of Jio in India. And you saw a massive contraction in mobile pricing after that new entrant came in. Spain, I think, has been a challenging market, again, because there's a very high degree of fragmentation in Spain. There's a lot of players. It's very cheap to build, particularly fixed line, and it's a converged market. UK is actually not a bad market. There was some very high handset in the sort of early part, but the underlying performance of the business has actually been pretty good. Monetization of those assets, part of the answer is, as you rightly say, it's just not that easy. There isn't a long list of buyers necessarily wanting to buy a telco in Spain. Whereas in Italy, they did receive a bid, but they rejected it because it was seen as being too low. I do think there is a sort of broader point that Vodafone clearly sees economies of scale from being in different markets. But against that, clearly some of these assets have been underperforming. The one that sort of stands out the most to me is Spain. That's probably the one where monetization could be the right answer. Where the other markets, it's really more about improving the operational performance in places like Germany and perhaps driving consolidation in Italy. And so I think there is a fairly broad support for exiting, particularly some of the weaker assets, and focusing on a smaller number of markets, but doing those really well.
Right. Because we have seen pruning of the portfolio. In subscale markets like Ghana, Hungary, Vodafone's exited. Reed also sold a stake in the TowerCo for a massive £15 billion to a KKR Saudi consortium. Germany too, they cashed out of Vantage Towers. In UK, there have been speculation that they're merging with Three to set up a giant telco in the UK. But either some of them don't fructify or they just don't seem enough.
Yeah, I think question is sort of how far do you go with these deals? And I think the big issue is really around control. As you mentioned in the case of their tower business, Vantage, they're doing this deal with KKR and GIP, but they will still end up in a co-control business, which means that they still end up owning part of it. And I think the question there is, well, do they eventually just fully exit it? Companies like Telefonica in Spain have completely sold out of their tower co. They used to have a bit called Telxius, which, they've completely exited. So, I think there is a sort of debate on should they hold on to their towers at all? What do they really get from co-control? Or do you monetize it completely?
So considering the company is trading at half its book value, which many would say is a clear indication of disposals as on yesterday, not today or tomorrow. And considering the sum of parts calculations clearly show, and as you also have indicated, that the value rests on just 3 or 4 markets. You, however, are saying that our only answer cannot be you get out of all these markets, you monetize, and you wash your hands off and you walk away. That can't be the only answer to actually get back in shape.
You're absolutely right. From a valuation point of view, this is stock trading on a low multiple. There are some benefits clearly in terms of sort of being more focused on a handful of markets. I think for me, the most important thing is being able to turn the business around, because that's ultimately what determines the value of these businesses. And that's why I don't think it's necessarily a sort of simple panacea just to monetize. I think ultimately this business needs to grow, and it needs to be able to grow sustainably over time. And I think, the answer to that is a little bit harder than just sort of, the slide deck and trying to find a bunch of buyers. So I think, the starting point for me has to be around improving the growth of the business, particularly with major markets. You mentioned the European ones, and obviously you got Vodacom as well, which is actually doing pretty well, and which is an important contributor to value as well and growth.
I mean, as you said, it's not just Europe. Vodafone has footprints in Turkey, it has footprints in Egypt, India, a perennial thorn or a noose around its neck. Do you think these are subscale and therefore time to flog the stakes, or businesses there?
No. I think, within that non-European footprint, there's a mixture of some very good businesses, Vodacom's, and then some very challenged ones like India. I mean, on my maths, I think Vodafone's lost something like $50 billion in India, which is well above its current market cap. So, India today is quite a small business, but it's been a huge drain on the capital of the company since their entry, it was 16 years ago. I think, should they look at exiting some of these things? The difficulty is, easier said than done. Some of these assets are challenged, and it's not obvious, what the exit path is. And that, means it's not a simple thing just to sort of say, well, it's non-core and we're going to get out.
But coming back to Kalyan, I wanted to suss out what his reporter's gut was telling him about the future prospects of Voda Idea and the potential next steps. What does your reporter gut tell you?
I have a feeling that there will be some effort to save the company. We've been hearing all sorts of things. See, if Vodafone does not get an external fundraise, indefinitely, it can't afford to wait indefinitely, right? They've been trying to lock this for the last 2 years. So at some point of time, patience is going to run out, right? So at some point, like you rightly said, they might not be earning enough. They might be losing more, and they might not be able to even clear bank dues. Now, the minute that happens, we could have a situation where somebody, a financial creditor, could be tempted to drag it to the bankruptcy court. Now, if that happens, then it becomes a very different situation. Because we've seen companies that go to NCLT, their assets have got acquired at throwaway prices. That's something which, abhi picture baki hai. So I wouldn't want to, venture into that territory as yet. But we've been hearing that maybe is this aloofness, this indifference on the part of the promoters from really coming up. Does it, send out a message? Is there a deeper message here? The government has come up with a solution. Ashwini Vaishnav, the telecom minister, recently, I think said last week only, he said that Vodafone has a host of complex problems and they need capital. And he pretty much indicated that the owners of Vodafone Idea need to take a call and need to make a significant capital infusion in the company, failing which it won't really be a viable situation for the government to step in and go ahead with the conversion.
My take, Vodafone from day one has done a pretty smart thing. Having lost more than $50 billion in India, that's more than its current market capitalization, it had routed the Indian joint venture through what is called an orphan SPV, meaning lenders in India will have no recourse whatsoever to its parent's balance sheet in the event of a default. Meanwhile, they have used the Indo-US Business Council recently to lobby with the Indian ambassador in London and nudge him to nudge the government for the government's conversion after hitting walls in New Delhi. Vodafone, of course, is putting capital literally in drips. Some 3,800 odd crore rupees by primarily selling some of their shares in Industars, but the proceeds from the sale eventually went to pay industry dues and not so much growth equity for the company. Now, Kalyan is hopeful that UK Prime Minister Rishi Sunak, with deep India connect and a financial whiz himself, will do some smart moves to get Vodafone Idea back in shape as the talks between India and UK have moved to fast track on the free trade agreement negotiations. Until then, we wait or find solace in the fact that Voda Idea stock has hit the lowest level since September of 2021, just earlier this week, as the doctors at DOT examines the financial and operational health of the venture. You have been listening to Vodafone Idea, Any Idea Sirji, on the Morning Brief with me, your host, Arijit Burman. Thanks Jacob and Kalyan for your insights. Deeply appreciated. The episode was produced by Sumit Pandey, Indranil Bhattacharya and Rajesh Nayak were the sound engineers, executive producers Anupriya Bahadur, Anirban Chaudhary and yours truly. We hope you liked this episode. Do share on your social media networks. The Morning Brief drops every Tuesday, Thursdays and Friday and is available on Spotify, Apple Podcast, Amazon, Google Podcasts as well as JioSaavn. Do tune in to ED Play as well, our latest platform for all audio content, including the Morning Brief. Goodbye and good luck. All clips used in this episode belong to their respective owners. Credits mentioned in the description.